that sense, although we have this benchmark rate as a guidance, but I think in the future, the deposit and lending rate would be also mainly determined by the market.
Just for one last question on that, that would imply to me that that would be gradually going up. Is that the way we should read it?
I would say that the best way to think of that is in order to gradually make this two-track interest rate gradually convergence to a more market mechanism. That is our reform direction. So if you think about what is the best strategy, the answer is that the best strategy is in the future make the two-track more or less convergent to one market mechanism. That would be the ideal scenario.
I think you have perfected very early the gift of central bank governors for being able to not say exactly where interest rates will go. So my congratulations. Mr. Iwata, can you perhaps say what you could learn from Japan in terms of what has happened in terms of monetary loosening?
Yes, quantitative easing policy, BOJ firstly introduced, that was 2001, and this is named the QE1. We have experience of QE1. Exit process, there had been no unintended effect on the market, and there had been no significant spillover with respect to capital inflow and outflow and exchange rate. But the problem is the movement toward exit was a bit too early, and we have not succeeded to defeating the long sustained deflation. That was too early exit. That was one lesson, and we should be cautious even today. We are now in the QE second, quantitative easing policy and yield curve control policy. And now there is some stealth tapering. This is there is a switch from quantity-oriented policy to interest rate-oriented policy. This is yield curve control. That implies short-term policy rate negative 0.1%, 10 years bond 0%. This yield curve completely flat. There had been a switch, this policy. Therefore, BOJ tended to disregard the quantity target, that according to this policy target, purchase is 80 trillion yen, but actually today, BOJ purchased only about 60 trillion yen. Therefore, market anticipate already BOJ in the process of exit. But I find that a little bit unfortunate, this communication problem. BOJ has no intention to move toward exit. But we want to maintain the same yield curve. This is the main emphasis. But the market receives, BOJ already moving toward exit. But you look at the inflation rate. Our inflation rate, excluding consumer price, excluding fresh food, stands at 1%. But we look at the U.S. type core inflation, that is CPI, excluding the energy and food, it stands at 0.3%, very close to zero. And IMF estimate 22 or 23% probability for Japan to return to deflation. Therefore, BOJ are rather careful for the moment on this exit. But market anticipate, and there is some gap between market perception and the BOJ. I find that a little bit unfortunate. Unintended consequence of this exit process now BOJ facing is in the process of exit, if BOJ really are moving toward raising interest rate, like the case with the United States, then the long-term rate is so low, zero. But there is an interest rate attached on the bank reserve, excess reserve. Today, there are three interest rates attached, minus 0.1, 0, and positive 0.1%. So there are three. In the process of raising the interest rate, maybe integrated into positive 0.1 and gradually raising. But it's very soon the interest rate revenue from holding JGB by BOJ stands at only 0.3%. Then the BOJ raises 2 times by each 0.25, and then BOJ should pay more, generates a deficit. This is predicted but unintended consequences.
Thank you.
This is that one problem. Just say. Yeah.
And maybe, Jim, you've spoken a great deal about the unintended consequences of monetary loosening. How do you see China's current position?
Well, you mentioned that I started my career as an academic economist, as a monetary economist, and now I'm a businessman. But in between, I was the chairman of the Commodity Futures Trading Commission, the United States Commodity Futures Trading Commission in Washington, and that experience led me to be very concerned about what I consider the unintended and not considered sufficiently consequences of very low interest rates. We've had an expansion of derivatives trading, which I believe is very dangerous for stability of even the world economy. We've had a tremendous increase in leverage, a lot of which is undisclosed. We don't really know for sure what the leverage is, even of the Chinese financial institutions, let alone our own. The expansion of private equity, which is able to make money as shares go up and borrow very, very cheaply. All of these are unintended consequences, but can be very, very important for stability. And so as we inevitably reverse this very, very cheap money, all of these potential sources of instability are things that we need to worry about. And so those are really my concern. It is the process of moving back to what I consider a normalized interest rate environment that I think will create difficulties along the way, but it's still the right thing to do because the difficulties are going to get much worse if we continue to have these artificially low rates everywhere.
Mr. Lee, perhaps you can give your view about what China should do now in terms of monetary policy.
I think in recent years, China's monetary policy has been in the right direction. So I want to congratulate Governor Yi for being the new governor of the PBOC because he has been working in central bank for over 30 years. So he can maintain the stability of China's monetary policy in his position.
After the 2008 financial crisis, China injected investment. Monetary policy was relatively easy back then. In retrospect, there have been many criticisms. And for me personally, I don't think such criticism is balanced and impartial. If China didn't use the investment to drive economic growth, what would have happened? We could not have tried again. We could not step back into history. Investment and easing or an expansion monetary policy caused certain problems. We need to properly deal with such problems. But still, we should be objective and impartial in reviewing the monetary policy in the past few years. China didn't adopt a zero or negative interest rate like EU or US counterparts did. We had some fine-tuning of monetary policy, and the same for the future. I don't expect major changes. I don't think there will be major changes in China's monetary policy.
Thank you very much. Craig, would you like to add anything particularly on that?
Yeah, look, I sort of figure that we all understand economic cycles. In my sort of 30-odd-year career, we've either been in an environment where monetary policy is tightening or monetary policy is easing. The sort of Goldilocks scenario seems to happen pretty rarely in my experience. But what of course we've had more in the Western world over the last 10 years is an extreme event and then an extreme reaction in terms of the monetary response. That's delivered a return to good economic growth, and the global economy is in a pretty healthy position. Monetary authorities around the world are starting to say, well, should we be starting to dampen demand, and how quickly should we approach that? I think there are two key challenges to think about as monetary policy tightens. First is the point Jim made around what about the unintended consequences of, if you like, the very strong asset price inflation that we've seen as a result of the monetary easing over the last 10 years. And then the second impact is, what is the impact of the technology revolution on the capacity and the productivity of labour, which is the traditional constraint that causes people to think rather than demand delivering growth, it'll deliver inflation. Our perspective is that the technology revolution, which has delivered very significant productivity improvements over the last 10 years, has also delivered very significant deflationary impacts into the world economy. And our expectation is that it's going to continue going forwards. So we would say that the need for tightening is probably there, but it needs to be very measured and needs to be carefully implemented and fine-tuned as we see the impacts of that tightening occur across the world.
Governor, I know that yesterday Xi Jinping laid out the idea of opening up China's financial markets, and I gather you have more details about some of the ideas that you want to push forward with that. Maybe you could tell us what they are.
Thank you very much, John. I would like to take this opportunity to announce the financial opening up. I will switch into Chinese.
Yesterday, President Xi announced greater and wider access to the financial sector. PBOC and other regulatory authorities are stepping up our implementation according to the request of the Central Party Committee. We will accelerate the opening up of the financial sector to enhance its competitiveness. For the next steps in the financial sector, we will follow the three following principles. First, we will adopt pre-establishment national treatment and a negative list. Second, financial sector opening up will go in tandem with exchange rate regime reform and capital account liberalization. Third, as we open up, we should at the same time prevent financial risks. Financial regulatory capacity should match the openness of the financial sector so as to prevent financial risks. To follow President Xi's remark that it is better to implement reform and opening up measures sooner rather than later, and we should implement these measures faster rather than slower. The following measures for opening up financial sector will be implemented in the next few months. First, remove the foreign ownership cap for banks and asset management companies, treating domestic and foreign capital equally. Allow foreign banks to set up branches and subsidiaries at the same time. Second, lift the foreign ownership cap to 51% for security companies, fund managers, futures companies, and life insurance, and remove the cap in 3 years. Third, no longer require joint-funded security companies to have at least one local security company as a shareholder. Fourth, to further improve the stock market connectivity of the Chinese mainland and Hong Kong, we will increase the daily quota by 4 times from May the 1st onward. after which the daily quota for Shanghai bond and Shenzhen bond investment will be increased from 13 billion yuan to 52 billion yuan, while that for Hong Kong bond investment from 10.5 billion yuan to 42 billion yuan. Fifth, allow eligible foreign investors to act as insurance agents and loss adjusters in China. Sixth, lift restrictions on the business scope of foreign investment insurance agent companies, treating them equally as domestic companies. So for these 6 measures will be implemented in the next few months. My prediction is that by 30th of June, most of these measures would have been implemented. Before the end of the year, we will put forward the following measures. First, encourage foreign ownership in trust, financial leasing, auto finance, currency brokerage, and consumer finance. Second, apply no cap to foreign ownership in financial asset investment companies and wealth management companies newly established by commercial banks. Third, substantially expand the business scope of foreign banks. Fourth, restrictions on the business scope of jointly funded security companies, treating domestic and foreign institutions as equals. Fifth, foreign insurance companies will no longer need to set up a representative office in China for 2 consecutive years prior to the establishment of a fully owned institution. Besides, I'm also delighted to announce here, based on the joint efforts by China and UK, preparatory work for launching Shanghai-London Connect is proceeding well. Mr. Fang Xinhai also in the audience. He is the chairman of CSRC. We aim to launch Shanghai-London Connect within 2 years. Previously, we've also announced some of the opening up policies in the financial service sector, and the progress is well underway. Previously, we've talked about the opening up of the bank cards, the market access for the clearing and payment institutions and entities. We would open up the credit rating services and also give access of most favored national treatment to the assessment institutions. Work in all these fronts have been well underway. Relevant departments are revising their regulations so as to ensure that these work will be phased in a timely fashion. To facilitate smooth running of these access widening, we will also give more supportive efforts. I'd like to emphasize in particular, as we open up the financial sector, we should also step up financial regulations. Some may have the misconception that once the financial sector is opened up, the regulatory approaches will be relaxed. I think you can be free of such concern. The opening up of the access to foreign business is one of the efforts, but at the same time, for whatever company that is of whatever ownership, we will have a prudential regulatory monitoring. Also, such regulatory monitoring is license-based, and it will be equal on both domestic and foreign ones. There will be license management and the access qualification and criteria control. By stepping up the regulatory monitoring, we can effectively mitigate against financial risks to enhance China's competitiveness in the financial sector so as to better promote the globalization and the opening up of China's financial sector. Thank you.
Mr. Governor, there is a wide array of measures there, which I'm sure people here will want to ask you about individuals, or do you ask Mr. Fan? But on the particular thing, this sounds as if China is finally happy with the idea of big foreign banks becoming some of the biggest banks in China, and finally happy with the idea of big foreign securities companies becoming some of the biggest companies inside China in those industries. Is that a fair approximation, as well as insurers?
We are opening up, and we welcome foreign banking, security, and insurance invest and operating in China, have the national treatment, which means that we have the domestic capital and foreign capital treated equally. Whether they can become the largest or the most competitive is subject to their competitiveness. And the market is open. And the performance in this market depends on the corporate governance and competitiveness, and that has to be seen in the future.
Would you be happy with foreign banks coming in and buying Chinese equivalents?
I think when we raise the equity cap, that's opening up the possibility of many channels, so that we, in each area, actually we have the law and the regulation. It has been fairly clear that we have the same treatment with foreign and domestic capital, and under the current prudential regulation and law, so that the channel and the field of competition is wide open.
Can I ask you one last question on that? If you look forward 2 or 3 years, do you see a completely different Chinese securities market with a much bigger bond market and a much broader array of instruments available?
I think in a few years with this open door policy, I'm confident that China financial market will be a more competitive market and better regulated, and also serve the real economy much better with a fair competition level of playing field, so that China companies, foreign companies can compete in a level of playing field. So that would make the entire service capacity, and in terms of serve the real economy, in terms of serve of different layers of customer products, would be much better than now. And also in terms of financial safety and the regulation would also be enhanced.
You talked a great deal about financial safety. A big worry of many outsiders when they look at China's banking system at the moment is the amount of debt that has been built up. You now have, I think China has increased its debt as a proportion of GDP by 100% over the past 9 years. That is even faster than America did before its problems. Is this a way of trying to clear that up, and do you worry about the health of Chinese banks in that way?
We do have this overall high leverage, high debt ratio problem. In terms of prudent monetary policy and also financial stability, I think we consider that high leverage ratio as a backdrop of the situation, so that we would like to first make the debt ratio stabilize, and also the second task is that make the structure of the debt ratio between corporate, household, government, central and local government more balanced, so that we can have some optimization among the structure of the debt ratio, and also make the overall debt ratio stabilized. That is the right approach to have a beautiful deleverage.
should ask Craig, as someone who is, would be a beneficiary in some ways of the changes you have just said, will this change the insurance market in China?
My initial response is if I looked at the Western media reporting on President Xi's speech last night, it was very positive, but laid out very high level, and the questions from the Western media was, when are we going to see the detail? Congratulations to Mr. Xi for providing that detail so quickly and in such detail as well. So
you'd almost think it had been pre-arranged.
Well, who'd have thought that? But the progress that China's been making in opening up its financial services market hasn't been slow. It's not been as fast as some people want. We have two very significant partnerships with China Life, the biggest life insurance company in China, and would have ambitions to grow more strongly in China. The announcements that I've just heard would indicate that possibility is open to us going forwards. I see that delivering more competition into the marketplace, but I'd also observe that China has very strong incumbent banks, very strong incumbent insurance groups, and the capacity for foreign organisations to compete effectively in China is going to be as difficult as say they found it in Australia, where essentially the insurance sector and particularly the banking sector is pretty much the same structure as it was before the marketplace there opened up.
Jim, you have had concerns about what follows in this scenario. Do you think this answers some of the questions that you had?
Well, yeah, it's very constructive without any question. And I was very pleased to hear the comment that there will be no great relaxation of regulation of financial institutions, because the opening up, while good in almost every respect, it does further interlink these economies in such a way that a financial crisis in the United States would become more important in China, and one in China more in the United States. And so the need for regulation is greater. And I just want to give my very simple view of what that regulation should consist of. The lesson from the 1929 crash in the United States was simple. We needed more disclosure, less leverage. More disclosure, less leverage. That's the whole lesson. And that's what I hope that regulation that the Chairman talked about will take that shape.
Governor Xi, can I push you on that particular issue of linking the American banking system to the Chinese one, firstly, and then secondly, can I also ask you, seeing it's in the news, so to speak, at the moment, the trade tensions with America, how do you feel about that? And is monetary policy one of the instruments that could be used in such a conflict if it were to happen? And how fair do you think that conflict is?
I will first give you a few thoughts on the U.S.-China trade tension. I think the trade imbalances between the largest economy and the second largest economy, U.S. and China, this problem is a very complicated problem. I want to make the following comments. First, this imbalances is a structural problem. Actually, China is in the end of the value-added production chain, so that China's surplus to United States actually represent the entire East Asia surplus to United States, because China imports parts from Japan, Korea, and Taiwan province, assembled in China and export to the United States, so that in the statistics it shows up as the China surplus to the United States, but actually China has the trade deficit with Japan and Korea and Taiwan province. So that if you look at this problem, we have to look at this problem from a multilateral view rather than a bilateral view of the trade imbalances. That's my first point. My second point is that the trade imbalances is a macroeconomic problem. And by that I say that if you look at the identity of national account, so the one side is the current account deficit, say, on the one side of the equation. The other side of the equation have three major things. The first thing is the government deficit. The second thing is investment. The third thing is private saving. If you look at the current situation where U.S. has the trade deficit with China, trade deficit on this side of the equation. The other side, if you look at the budget deficit, U.S. government deficit, that is increasing. The higher the deficit, the higher the trade deficit, right? That's very clear. And the second term is investment. And with the infrastructure investment program, and the U.S. economy is better, U.S. investment is higher, and the higher the investment, the higher the current account deficit, right? The third term is private saving. And right now, U.S. private saving rate is a little bit declining, so that is also make the reduce of the current account deficit very difficult. So that if you look at the identity of national account, see what is the current account deficit consists of, you would realize this is a very tough question, right? The third point I want to make is that when we look at China-U.S. trade, we have to not only look at the goods trade, but also we have to look at the service trade. And the U.S. have the comparative advantage in service trade. And if you look at that, the China's service trade deficit with the United States has been growing very rapidly at 20% a year in the past 10 years. So that last year, the service trade deficit of China to United States is more than $38 billion US. So that I would say that with the financial opening up and the service industry opening up, U.S. in the future would have more comparative advantage in service trade, so that when we have the goods trade and service trade, these two would be balanced out of each other. That's my third point.
So if Americans saved more and their government spent less and they measured their exports correctly, there would be no problem?
I would say so. And the last point I want to make is that you see, we have to consider American multinational companies operating in China. They sold a lot of goods in China, a lot of sale, huge amount of sale and profit in China. And when we say U.S. and China trade imbalances, we didn't include that U.S. multinational companies' sale in China and the profit in China. I think if we consider that factor, that would make the entire imbalances situation much better, so that we only concentrate on China enterprise sell commodities to United States. But if you look at the U.S. multinational companies, they are operating in China, they have a huge amount of sale and profits in China. If we take that into account, that also changed the picture a lot. So to summarize, my point is that we have to analyze the economic situation and realize this is a structural problem, and it probably is a long-term problem, and we have to deal with this problem in a rational way. Thank you.
Just very quickly on the two other questions. One was about monetary policy being an acceptable part of the arguments with America. That, as you know, President Trump in particular has always gone on about the currency in China, at least partly. If there is to be any kind of conflict with America, is monetary policy a reasonable part of that argument?
I think that our monetary policy is focusing on the domestic macroeconomic situation, and it serves the real economy.
But China wouldn't be prepared to let its currency go down if there were tariffs.
Our monetary policy, as well as our exchange rate system, has been working very well. Our exchange rate system is demand and supply determined with a basket of currencies as reference and manage the floating exchange rate system. It has been working very well, and basically central bank doesn't have intervention for a long time, and also it serves Chinese people well, and we have more than 100 million people going abroad, and they, you see, use foreign exchange very conveniently, and our exchange rate system make the enterprise and household and the entire China, and also foreign companies operating in China, has been very convenient in terms of trade and investment. And the exchange rate mechanism is a market-determined mechanism. It's working very well, and I think it will continue working very well as it is.
Just to deal with Jim's question about if you link the American system and the Chinese system together, do you worry about there being greater vulnerability to banking crashes?
I agree with Jim. He emphasized the importance of strengthening regulation. At that point, I think we are on the same page. I would say that we should strengthening regulation, and especially when you opening up, when you make the market more competitive, it should strengthen the regulation and make the level of playing field being more fair and allow foreign and domestic financial institutions to compete.
I just finally come, before we go to questions from the audience, to Mr. Lee and ask you particularly about Chinese banks, which you oversee some of the state-owned banks, what the effect of the reforms that the governor has outlined, what do you think the effect will be on them, and what will be will it be good or bad for them?
I think in the past 10 to 20 years, Chinese banks have made progress. You can see the rankings of international banks. So Chinese banks have been ranking among the top in recent years. So we can see, in terms of reform and governance and risk management, Chinese banks are making progress. So that is why we're ready to open wider to the outside world. Of course, state-owned banks still has a lot to improve. This is actually in compliance with the overall national reform. The Central Huijin Corporation is one of the state-owned holding companies. The equity shareholders will always play their role. In terms of ordinary questions, they can issue their individual opinions, but for important major issues, the banks need to be authorized by the big shareholders.
I think the governance structure is very healthy. The interests of shareholders in banks are well protected. So once we attract and invite foreign investment, I think we already have in place a healthy governance structure. If foreign capital joins us, or if they establish their own companies, domestic banks are well positioned to compete, and this competition will help in turn to enhance our governance as well.
We will now throw it open to questions from the audience, and if you could try and keep your question as short and direct as possible, that would be very kind. If people put their hands up. There's a lady here.
我想问银行长，
I have a question for Governor Yi. The normalization of monetary policy and the opening up of the financial sector may have some benefits for the real economy. What are they? Second, in the opening up of China's banking sector, how can we enhance our international competitiveness?
Should we answer or should we collect
I
a few
think
questions?
maybe collect one or two others. Is there another question? Lady there. And then we'll do the gentleman there.
Governor Yi, I'm from Tencent. I have a question for Bitcoins. Last year, PBOC has issued regulations on the virtual currency and banned the establishment of a virtual currency exchange institute. But there has been some real practice in overseas markets. So what might be the new approach by the central bank for virtual currency?
Simon Cox from The Economist.
Simon Cox from The Economist. In the 90s and 2000s, monetary policy in Japan seemed to lose its power, or some of its power, to revive the economy. Krugman talked about a liquidity trap. Do you think China could be vulnerable to the same trap? And that question is addressed both to Iwata-san and to Mr. Yi.
Shall we head into those three? So you have Bitcoin, the effect on monetary policy, and are you making the same mistake as Japan?
货币政策的变化和开放对实体经济呢，肯定是有好处的。我们所有这些呢，其实都是为了金融业怎么样更好的服务实体经济来设计的。那么这些政策呢，也有利于中国银行业在国内的竞争，并且有利于中国的银行业走出去，在这个全世界的竞争。关于虚拟货币，这个朋友讲的，我们确实呢，是认为这个虚拟货币呢，它对实体经济的服务比较少，有一些这个投机甚至有一些这个洗钱和其他的这个行为，所以呢，在中国我们对这个虚拟货币呢，一直是比较谨慎的，一直是比较谨慎的。但是呢，你知道，实际上呢，现在呢，对这个digital currency 在全世界的研究，这个中国的研究呢是走在前面的。我们也在研究这个数字货币它怎么样能够以一个最好的形式，能够服务实体经济，以一个最好的形式来安全的发展，来能回避有一些可能的负面的影响，使得数字货币呢能够更好的为这个经济服务。这里也包括区块链技术，也包括这个我们说的 fintech， 就是这个金融科技这一块。那么整体来讲呢，我们对这个虚拟货币的监管是非常严格的。同时呢，我们也在研究如何发挥数字货币它的正能量和这个更好的服务于实体经济。关于这位朋友说的这个流动性陷阱过去在日本是这样的。我认为简单的说，中国目前离流动性陷阱还比较远。不过呢，这个流动性陷阱这个极端的情形，对我们制定货币政策一直是有益的一个极端的情形的考虑。谢谢。
Do you want to answer the question about Japan, about the liquidity trap?
Japan faced this U.S.-Japan trade policy issue already started in the 1970s and 80s and even until mid-1990s. So long time we had accumulation of experience how to deal with this U.S. request. We have accommodated, for instance, by adopting voluntary export restraint or the increase foreign direct investment in the United States to increase the employment in the United States and the production in the United States. And the number of measures we have provided. But one of the unfortunate things is in the mid-1980, Plaza Accord, 85. According to its Plaza Accord, U.S. requested sharp depreciation of dollar and sharp appreciation of yen. But outcome is much more sharper than we expected. Our yen rate at that time, 240 yen per dollar. But in the coming 10 years, in the year 1998, yen rate rose to 80 yen per dollar, from 240 to 80 yen. I find this created a big difficulty for the export-oriented industry in Japan. And this work apparently weakened the international competitiveness of Japanese industry. This is the one lesson. Therefore, we should be careful, also China careful, on this exchange rate issues. I find some danger on relating to this is Korea and the U.S. bilateral trade talk, free FTA, renegotiation. In this renegotiation, currency clause included. That implies the U.S. always concerned in order to cut the deficit. The dollar must be protected against appreciation. So very strong message. I find the trade issue and this macroeconomic issue or monetary policy, this mixing up these issues very, very dangerous. Monetary policy should be oriented to maintaining price stability and the maximum employment. This is the only goal. Must be independent of this trade issue. But this kind of currency clause included, then the indirectly monetary policy affected by the trade balance. But monetary policy authority should be independent from this trade balance. This is one lesson.
I think every economist would agree with you, but the basic fact is that politicians mix currency policy and trade policy, even in China, maybe.
Yes, that's quite unfortunate. We should persuade, as already Governor Yi said, in order to cut, for instance, President Trump won't cut the trade deficit by $100 billion. But best way is to cut the budget deficit, But what is actually happening, the widening the deficit by adopting quite expansionary, tax reform and also the infrastructure investment. Totally, both of them 1.5 trillion yen and 1.5 trillion yen, and the budget deficit increase in the coming years, reaching $1 trillion deficit in the United States. The priority for U.S. is cut down this deficit.
Jim, you wanted to come quickly.
Yes, very, very quickly. It often seems to be my interest to insert a note of caution, so I have two. There was a question about opening the financial sector and the real economy, how it would affect it. I think in the United States, when I was young, the whole financial sector absorbed something like 6 or 7% of all the profits in the country. Now 30%. I think that's actually hurt our growth rather than helped. So you don't want to go too far, too fast. And the second note of caution I wanted to insert related to Bitcoin. I believe that all the benefits talked about for Bitcoin and blockchain are a little hill, and the mountain is the extent to which they can help in the evasion of taxes and the ability to perform illegal sales of drugs and arms and things that ought to be stopped. So I am very afraid of the Bitcoin movement, and I hope it is not something that will be encouraged here.
More questions from the audience. Two ladies there. One in red, one in white.
I'm from Phoenix Finance. I have a question for Governor Yi. You've talked about many opening up policies, and for the capital account, And the capital account, what are the opening up merits and how do we manage the risks? What might be the regulatory pattern? Will it be a mixed business or mixed industry lines monitoring?
Should we take one more from the lady in red beside you?
Thank you. It's Zoe from CGTN, also known as the English News Channel of CCTV. Sorry, my question is a little bit similar with this lady. First of all, thank you so much for releasing this big package. So we've been expecting this big package since the 2 sessions, and thank goodness finally it is unveiled. It's kind of similar. Governor Yi, you mentioned this enhanced supervision in order to avoid the systematic risks, but because this is given one of the most bold moves by the PBOC in the recent decades. So can you give us a little bit more specifics and details on the strengthened and enhanced supervision? Thank you.
Maybe. Do you want to take those two, Governor Yi?
Okay, thank you. 这个开放措施、资本项目可兑换、人民币国际化，我认为呢，就是我们一直是在稳步的推进资本项目可兑换。大家想想，现在和多少年以前比，我们资本项目可兑换，不管是在 FDI 还是在 ODI， 还是在这个金融市场方面，比如说中国的股市、债市，这个外资怎么进入中国的股市债市怎么样纳入这个全世界的主要的这个指数，这些工作都在做，就包括我刚才宣布的提高这个沪港通、深港通和这个港股通的这个每天的这个额度实际上呢，它都是在有序的实现资本项目的可兑换，使大家这个在资本项目下越来越方便。同时呢，我们的这个改革的步骤呢是稳妥的。稳妥的意思呢，就是说它还是要控制住风险，使得整个这个过程呢比较平稳。人民币国际化呢，它也是一个水到渠成的过程。人民币国际化呢，它是一个市场驱动的过程。所以呢，我们如果企业和这个金融机构还有这个个人，他有这方面的需求人民币国际化可以节约交易成本，可以节约这个货币错配的这个成本这个对冲这个货币错配的风险，那我们都乐见其成。但是呢，它主要的呢是说要市场驱动，我们要使得人民币、美元、欧元、日元和其他货币的竞争是平等的竞争是平等的，企业可以自由的选择它用哪种货币这方面用哪种货币所以呢，我觉得是这样考虑这个问题第二个问题关于这个监管我认为目前中国的这个监管的框架一定要加强监管，但是我们目前的这个监管的这个基本的框架还是一个这个分业监管的框架。在这个分业监管的框架，这个职责呢是清晰的，但是呢，从过去这些年的经验来看呢，我们要特别关注这个跨市场、跨产品和跨机构的这种风险的传染比如说我们考虑的就是这个大资管这个指导意见未来将要出台。实际上呢，我们就使得这个资产管理这个业务，不管你是银行做的，还是证券做的，还是保险做的，都应该在同一个规则下。
No matter you're in the banking, insurance, or securities sectors, they will compete in the same level field and reduce the regulatory arbitrage.
Two people in blue shirts. There's one there, one there, both with glasses.
My question is also for Mr. Yi. Currently, there is internet alliance established to actually consolidate the Alipay and WeChat payment. What's the sense of that? My question also is for Mr. Yi. We're talking about the monitoring policy back to normal, but for China is in a new normal economic situation. For example, China's economy is maintaining medium to high speed development and deleverage, and also fend off the financial risks are all the features in this regard. The central banks will refer to the open market measures to adjust the money supply. And for the interest rate adjustment, it focused more on like signal measure. You mentioned two tracks of the interest rate, which will be try to be converged in the future.
Should we just do the lady there who's been waiting?
I'm from Tencent. My question is also for Governor Yi about interest rate. In the U.S.-China trade deficit, America is willing to increase its interest rate, and will China have corresponding measures? From last year, we see the interest rate of China's housing market is on the rise. Can we understand it as a variable of interest rate increase? And will the mortgage interest rate keep going up?
这个我们这个讨论的专家呢，他们都是我非常尊重的。
Actually, our experts or panelists sitting here are all the top experts sitting here. I really hope that the journalist friends can raise more questions to them instead of me. It's a rare opportunity because they are all the top experts in their field. As for the Internet Alliance you mentioned, it's based on the concern of the security and fair competition of the Internet payment systems. In China, the third-party payment system and mobile payment system has developed very fast and very advancing in the world, and has been talked about by other countries. People are all talking about the convenience and benefit it provided to the Chinese people, but we also find some risks in such payment systems. How do we prevent such risks and in the meantime encourage innovation and competition? This is a complicated question. We need to make a balance. So for the design of the institution, we are moving toward this direction. And the last two questions are about interest rate. For example, the OTC market interest rate adjustment, is it just a signal? Another is about the housing mortgage interest rate. As I said, China's monetary policy has always been sound and prudent. For example, the overnight, the 7 days, and the Treasury bill interest rate are all at a comfortable level. Even when developed countries have zero interest rate, our interest rate is still stable. So we have such foundation. When other countries begin to increase their interest rate, for example, U.S. have been done this for 6 times. And under that context, we can see the RMB yield curve is still higher than the U.S. dollars. For example, 80 to 100 base points. So we still have the spread. I think current structure of the monetary policy and spread is stable overall, and it is favorable for Chinese economic development. Good or bad, stable or not, it is based on its effect on the real economy, our financing, and the support given by financial sector to the real economy, and also the expectation for future. So, for these two aspects, we are in an appropriate or comfortable range. Thank you.
Lady in white there, and another one at the back.
Thanks. I'm from China Daily. I have a question for Governor Yi. That if we further open the financial markets, then will be related to some fluctuations of the capital cross-border capital flow. So, what is the consequences that you can expect that the influences, and how can manage the cross-border capital flow? Thanks.
谢谢，我有2个问题，来自新华社。
I'm from Xinhua News Agency. I have 2 questions. First is also for Mr. Yi.
关于REITs，那么
about REITs, real estate. So the public rates has been discussed for many times, but hasn't been launched yet. I want to ask the central bank's comment or opinions on the public rates. And second question is for the Australia expert. China has the Belt and Road Initiative. I don't know whether you has any comment on Belt and Road, especially on the financial cooperation.
Variety, Greg, why don't you explain why the Belt and Road doesn't go through Sydney?
Oh, we're a long way from everywhere else in the world. So, and there's only 24 million people in Sydney, so if I was going to build a road, I'd probably build it to where the big population is. Look, the cooperation between Australia and China is absolutely extensive. It's born out of the fact that Australia has an endless supply of resources that China has a need for. So the trading relationship between Australia and China is the most significant trading relationship that Australia has. Is there an opportunity for Australia and Australian businesses to get more involved in infrastructure development within China? It's on the financial services side, that's actually a key strength of many financial services groups within Australia, and that would be an area that we would be actively pursuing and discussing with our partners in China.
Governor?
跨境资本流动
About the cross-border capital flow.
目前呢是比较平稳。
It's stable
当我们进一
currently.
步金融开放的时候，
When the financial sector is
我
further
们考虑
opening
这个
up,
问题呢，应当说呢，比如说中国的
we need to consider,
货币市场啊，中国的
for example,
债券市场
China's
和中国的这个
monitoring
资本市场、股票
policy,
市场
capital,
对外开放
equity
程度进一
market
步扩大。同时呢，中国
to
的
be open wider,
老百姓也好，
and
机构
the
也好，
Chinese people,
也将来在
institutions
更大的程度上
will
在全球配置他们的资源。 那么这样
allocate their
呢，使得
resources
这个我们的金融市场
on
开
a
放度进一步
higher
提高。
extent
那么在这
globally.
个过程中呢，它是需
In
要
this process,
有资
we
本流入流出的。
need
所
the
以呢，我
capital
们希望
flow
呢，这个流入
inward
流出
and
是平
outward.
的，是平
We
衡
hope
的。
such a
这样的这个
capital
资本
flow
流入
can
流出
maintain
呢，
a
它是有利
equilibrium,
于我们在全球配置
which is
资源。
beneficial
从外国
for
投资者的
the
角度来讲，
allocating
他们
resources
比如说中国的一些主要的
globally.
债券市场和股票市场纳入这个 MSCI 指数，纳
some
入这个
major
Bloomberg
Chinese
的这个
equity
指数。
and
那
securities
么
market
从外国投
is
资者来讲呢，他们是
included
机构投资
into
者，那么
MSCI
他
and
们就要相
Bloomberg
应的配置
indexed.
这部分
So
资产，也就是说，这个他们要
As
投
the
资中国的资本市
investment
场和债券市场。
institutions, if they want to
那么
invest
从
in these
中国
two
的这
markets,
个
they
投
will
资者
have relative
我们的机构
assets
投资者，我们的
allocated to
理
these two
财
markets.
我们
And
的
for
老百
Chinese
姓，
investors,
他也
their
想
wealth
在全世界的
management
范围内
product
这个
also
来
wants
配置
to
他的资产。我们
go
目
to
前中国老
the
百
foreign
姓
products
的
as well.
企业和机构在全世
Currently,
界配置资产的这个
Chinese,
比例呢，
the proportion
还
of
是偏低的。
Chinese
所以呢，我觉得
individuals
随
and
着这个开放
institutions
两
do
个
not
方向的需求都有。所以呢，既然是两
have
个方
much
向的需求都
investment
有，
on
我觉得呢，这
overseas
个跨境的
wealth
资本流
management
动呢
product.
是
As
可以是平稳
long as
和这个高
this
效的。
ratio goes up,
你说的关于 REITs 资产证券
we
化
will
这
see
个问
more
题，是一个稍
cross-capital
微复杂一点的
flow.
问题。
And
我
about
们的这
the
个问这个
REITs,
REITs
it's a
因
more
为做起来呢，其
complicated
中有很大的
problem.
一
There
部
are a
分
lot of
原因呢，
reasons why
因
it
为它
hasn't
那
been
个
launched
基
yet,
础资产
because it's a
它
underlying
怎么
asset.
考虑和这个发达市场的 REITs 是不一样的。人家
How
的
do we
基础资
define
产
the
呢
underlying
是
assets in
就是要
China is
卖
different
掉
from that
就
of
是要
developed
REITs
countries.
以后呢，就是资产证券化了以后呢，这部分资产真正的是
When these
这
assets
个
is
卖给市场了。
securitized, these
这样
assets
呢
are
使得人
actually sold to
这
the
个银行的
market.
资本
so that the CAR ratio of the banks and the leverage of the banks will go down. And for Chinese institutions, sometimes REITs is their best assets, and they don't want to sell it. So there are some considerations or difficulties for the banks. From policy's point of view, we're also considering how to more effectively develop the market of REITs.
Mr. Kazumasa wanted to add something.
This financial liberalization and the opening up market, as I said, trade dispute, so long-standing issue for Japan. And in the 1983, we had the Dollar-Yen Committee. This is the negotiation, further opening up our financial market to foreign competitors. And there had been a discussion. The U.S. side argued, if the external liberalization proceeds more rapidly, then the more massive inflow into Japan, that would work to appreciate yen. And finally, this works to reduce the trade balance surplus on the side of Japan. That argument there. But what was interesting at that time, remaining restriction on the external restriction and the internal restriction, there had been, with respect to capital export, there had been some restriction, but capital import, virtually no. And then Yendra committee, external, capital export side restriction relaxed, and then capital outflow intensified, not capital inflow. And as a result, no yen appreciation, and instead we have depreciation of yen due to this opening up of market. That indicates the importance, this way of liberalization. Import side, capital import side, or capital export side, this is must be well balanced. In addition, and if you do the capital account liberalization, if capital inflow and outflow must be liberalized, then exchange rate must be more flexible, because allow for this free movement of capital, exchange rate must be endogenous, not regulated. So therefore, two of the things, external liberalization and internal liberalization, domestic market liberalization, must be well balanced.
We have less than a minute left, so in a very dictatorial way, I was going to ask one pretentious question of the governor, and perhaps Mr. Fung also, is that when you are, what you are doing the equivalent of China's Big Bang, in the sense that, if you remember, in the 1980s, Britain opened up its market in a very similar way. It liberalized the security side, it let foreigners come in and buy banks, and it created, in the City of London, the main financial centre. Is there a plan? Mr. Fung may want to answer as well. He doesn't. Is there a plan to create a similar centre in China through this degree of opening up? And what lessons did you learn from that?
I think that Chinese philosophy is gradualism and modest. So that I'll be very cautious.
So this is a small bang.
I even don't want to use the word bang, no matter it's large or small. I think this is a prudent. It's a cautious, gradualist move. And as I said, that there are three principles. One is we want this national treatment, a negative list. The other is, as my Japanese friend said, that you have to balance the three things: financial opening up, exchange rate being flexibility, and also capital account liberalization. You have to make these three things in a harmony and coordinated way. And the third one is you have to strengthening financial regulation and realize that there is a risk. Maybe capital flow, maybe other types of risk going on. So that this is a very cautious move. So that the simple answer is I don't want to use any ban. I think this is a gradualist, cautious move, whereas the announcement of opening up opening up move, the condition has been mature, and for each we have cautious regulatory and data readiness, so that now we are ready to move ahead.
I'd like to thank all the participants. What the governor very modestly described as a gradualist, cautious move may generate a lot of headlines, I suspect. And I apologize to the other participants for having less time for them sometimes. But thank you all very much.